Hi, it's Lee. Today I want to talk about one of those secrets of wealth. That has to do with the question, can you measure your money? Many books and articles are written every year about how to budget your money or raise or find the money so you can achieve the objectives you want. You'll see illustrations, charts, and big long descriptions showing all the various different choices, the best interest rates on savings, and the best savings account. Yet there is a very basic principle you need to understand that is not covered in virtually all the information available. That gem, that thing you must understand, is how to measure what money must do in order to achieve your dreams. I am about to introduce to you what must happen with every dollar you save. That is a prerequisite for everything else you need to learn about money. Everyone is capable of obtaining money, but it is of little use to them if they do not know how it must work for them. You are about to learn what no one has ever told you about making money. Here's the simple formula. T times M times R equals O. Time times money times return equals your objective. For example, if your objective is $58,000 and you're only going to save $10 a month, the questions now are, how much time and at what rate of return? The answer is $10 a month at 10% return for 40 years equals $58,000. But you say there are alternatives. $58,000 can also be achieved in 20 years if $76 is invested at 10%. Or you could invest $275 at 10% for 10 years. If after researching bank interest rates you were to accept less return, say 6%, it would take $29.50 per year for 40 years. How do you know if money is working for you or for someone else? That is why you must know how to measure money and what it can do. If the average person saved $120 a month and put that money into a high-interest savings account with a no-risk return of 6% for 40 years, they would end up with $236,260 in 40 years. The above has been an example how you can measure that money in relation to time and return. It shows what amount of money is required in relation to time to achieve the same objective at the same return. What can that $58,000 do for you? At 5%, it will provide you with an income of $2,900 per year for the rest of your life. If you increase the return to, say, 6%, you would be provided with $3,480 per year. Okay, I'm going to show you a couple of charts right now, and it might be a good idea to pause the video and take a closer look at these charts. The first shows what happens when a single dollar is saved each year over a time of 5 to 40 years, and the saving interest rate could vary between 1 and 15%. The second chart shows the working life of a single dollar for 5 to 65 years with a rate of return between 1 and 15%. So what conclusion can we draw when we look at that formula? Time times money times return equals objective. One very important conclusion is the higher the return, the more money you're going to end up in the long run. Another conclusion might be the sooner you start saving, the better. The more money you're going to end up in the long run. And of course, the more money you can save on a regular basis, the better off you're going to be. So the question is, can you measure money? And do you understand what it can do for you? Okay, I've got a question for you. Are you going to retire rich? I've got something very special for you. I've got a 45-minute presentation by David Bach where he talks about his book, The Automatic Millionaire. In this presentation, he will ask you 6 questions. And I don't care how old you are right now, but the answer to those 6 questions are all you need to know to determine right now whether or not you will be in the 20% who can afford to retire at the age of 65 or sooner, or whether you're in the 80% who end up working all their lives till they're incapable of working anymore. This is my gift to you. There is no question in my mind that you could be the next automatic millionaire. Go check it out at www.getinthewealthgame.com. I look forward to reading your comments after you've watched the video.